You could be overpaying on your UK taxes by thousands of pounds, and you probably don't even know it. It's a silent drain on the bank accounts of countless newcomers, and it's all happening completely legally. The UK's tax system is, well, it's complicated. That complexity, mixed with a lack of awareness about rules for new arrivals, means you could be leaving a hefty chunk of your hard-earned money on the table. This isn't about some sneaky loophole. It's about understanding a system that might be taking more from you than it should. Stick with me, and I'll show you how to figure out if you're one of the thousands affected and, more importantly, how to fix it. Section 1. The first mistake is your tax code. The first place to hunt for that lost money is your payslip. See that 3 or 4-digit number followed by a letter? That's your tax code. It's a little instruction to your employer on how much of your income should be tax-free. For the 2025-2026 tax year, most people will have the code 1257L. This tells your boss you can earn £12,570 before the taxman takes a penny. But here's the thing. When you first get here and start a job, HMRC, the UK's tax authority, doesn't know you from Adam. So what do? They often slap you with an emergency tax code. If you see codes with W1, M1, or X on your payslip, those are huge red flags. It means your tax is being worked out week by week or month by month without using your full year's tax-free allowance. The result? You're paying way more tax than you should be. This is easily the most common trap for new immigrants. You're juggling a new life, a new home, a new job. Checking your tax code is probably the last thing on your mind. But an emergency code means you could be handing over too much cash to HMRC every single month. So, how do you fix it? First, grab your payslip. If you don't see 1257L, it's time to act. Get in touch with HMRC. You can do this online through your personal tax account on the jovi.uk website, or you can give them a call. You'll need your national insurance number and your employer's details ready. Once you've given them the right info, they'll send a new tax code to your employer. The best part? Any tax you've overpaid in the current tax year is usually refunded automatically in your next paycheck. If the tax year has already passed, you'll need to claim it back from HMRC, but don't worry, you can claim back overpaid tax for the last 4 years. Section 2. The Residency Revolution. A major shift from April 2025. Now, this next part is one of the biggest shakeups to the UK tax system in over 200 years, and it affects every single person moving to the UK. From April 6, 2025, the game has completely changed. The old, confusing system based on your domicile, where you considered your permanent home, is gone. It's been replaced by a much simpler idea based purely on residence. What on earth does that mean for you? Put simply, how much tax you pay is now all about how much time you physically spend in the UK, not some vague concept of a permanent home. HMRC uses something called the statutory residence test, which looks at things like how many days you're here and if you have work or family in the UK. If you're a UK resident, you're generally taxed on your income from all over the world. If you're not, you only pay tax on the money you make in the UK. But here's the golden ticket for new arrivals. The 2025 rules brought in a brand new, incredibly generous deal for anyone who has been a non-UK resident for the last 10 years straight. For your first 4 years living in the UK, you can get 100% tax relief on your foreign income and gains. This means you can bring that money into the UK without paying a single penny of UK tax on it. This is a massive deal. Under the old rules, bringing foreign money to the UK would have landed you with a tax bill. This new 4-year window is designed to make the UK a more attractive place to live and work. But here's the catch. You have to actually claim it. It doesn't just happen. If you've got savings, investments, or rental properties back home, this isn't just a tip. It's essential knowledge for setting up your finances right from day one. Section 3. Allowances they don't announce at the airport. Beyond the standard tax-free personal allowance that everyone gets, There's a whole bunch of other allowances that many immigrants have no idea even exist. Think of them as extra little pots of tax-free money you can claim. First up, the marriage allowance. If you're married or in a civil partnership, and one of you earns less than the £12,570 personal allowance, you can transfer £1,260 of your unused allowance to your partner. To get this, the partner receiving the allowance needs to be a basic rate taxpayer, which for 2025-26 means their income is generally between £12,571 and £50,270. This simple move can cut your partner's tax bill by up to £252 for the year. You can even backdate your claim for up to 4 previous tax years, which could mean a lump sum of over £1,000 coming back to you. Next, let's talk about savings and dividends. The personal savings allowance lets basic rate taxpayers earn up to £1,000 in interest from savings without paying any tax. For higher rate taxpayers, that figure is £500. If you've moved money into a UK bank account, you need to know about this. In a similar vein, the dividend allowance gives you a tax-free amount for income you get from shares. These might not sound like life-changing amounts on their own, but trust me, they add up. Not claiming the marriage allowance for 4 years is like throwing away £1,000. It's money you're legally entitled to, but the ball is in your court to claim it. Section 4. Tax reliefs. Getting money back for your expenses. Tax reliefs are a bit different from allowances. They cut your tax bill by letting you claim back tax on money you had to spend on specific necessary things. A really common one is for work-related expenses. This can cover things like professional fees and subscriptions. If you have to pay to be a member of an approved professional body to do your job, you can claim tax relief on that cost. Work from home allowance. If your job requires you to work from home regularly, you can claim some relief for the extra costs of heating and electricity. Uniforms and tools. If you have to buy specific work clothes or your own tools, you can claim relief on what you spent. Another huge one is pension contributions. When you pay into a UK-registered pension, the government gives you a top-up through tax relief. If you're a basic rate taxpayer, for every $80 you put in, the government adds £20, making your total contribution £100. It's one of the smartest ways to save for your future while cutting your tax bill right now. A lot of immigrants, especially if you're on a temporary work visa, might not think about joining a pension scheme straight away. It can feel like a long-term thing. But auto-enrollment is standard in most jobs now, and the tax benefits kick in immediately. Don't just opt out without understanding what you're leaving on the table. Section 5. The self-assessment net. Finally, let's talk about self-assessment. For most employees, tax is handled automatically through the pay-as-you-earn, pay-ie system. But for many immigrants, your financial life isn't that simple. You have to file a self-assessment tax return if you have any income that hasn't been taxed yet. This is especially true if you are self-employed or have a side hustle. Get rental income from a property in the UK or another country. Have a lot of income from savings or investments, particularly from overseas. Have foreign income to report, especially after that new 4-year relief period is over. It's easy for newcomers to get caught in the self-assessment net without even knowing it. That rental property you kept in your home country? If you're a tax resident here, you need to declare that income in the UK. Not doing so can lead to some pretty hefty penalties. But self-assessment isn't just a chore. It's an opportunity. It's the main way you can claim many of the reliefs we've just talked about. When you fill out your tax return, you can deduct your allowable expenses from your rental or self-employment income, which directly shrinks your tax bill. It makes you take an active role in your own tax affairs, which is the single best thing you can do to make sure you're not paying more than you have to. Look, the UK tax system is complicated, but it's not some unsolvable puzzle. The secrets to saving thousands are hiding in plain sight. On your payslip, in the new residency rules, And in the allowances and reliefs you have every right to claim. So, start by digging out your last payslip and checking that tax code. Head over to the gov.uk website and read about the marriage allowance to see if you and your partner could be saving money. Think about any foreign income or work expenses you might have. Taking control of this isn't just about the money, it's about feeling empowered. It's about understanding the financial system of your new home and making it work for you, not against you. If this was helpful, subscribe for more guides to navigating your financial life in the UK. And I want to hear from you. Drop a comment below. Have you ever been stuck on an emergency tax code? Did you know about the marriage allowance? Sharing what you've been through could help someone else who's just starting out. Don't leave your money in the hands of a system that doesn't know you yet. Go claim what's yours.